Daktari, good evening, esteemed members, and welcome to today's webinar. If you can hear me, just send a message in the chat and let us know from which PSK branch you're joining us from. Thank you all. Thank you all for responding and just letting us know where you're joining us from. A warm welcome to you all. I see we have Dr. Frederick from Nairobi, Dr. Tom from Central. Let's see which other branches he presented. Dr. Shtal from North Rift, Dr. Caroline from Mombasa. Thank you so much for joining. From Nakuru, we have Dr. Misango. From Kisii, Dr. Kanyari, Dr. Frederick from Meru. Santeni sana for joining. So I think just before we start, I'd like to start by asking you to just take a minute of your time and go to the PPB portal and subscribe to this event. This is how the event is titled, Financial Risk Retirement and Wealth Strategies. You can use the keyword wealth or financial to be able to find it easily. And please note that you'll be able to see two entries, but one is not active. So ensure that you take the right one, which is financial risk retirement and wealth strategies. So once you subscribe, just send a message in the chat and you can just type done or just say that you've subscribed. Thank you. Thank you. I see a couple of you are subscribed. And remember, the reason why we're doing this is because we really have a short timeline in which you're required to subscribe and claim. So we only have 7 days to do this. If it's not done, the event will disappear and will not be possible to subscribe and claim your points again. So ensure you just take a minute of your time and you do that. Okay, so I see we are now past 500 participants. We'll just get started and as the other members continue joining us. So once again, welcome to today's webinar. And this webinar is being sponsored by Larson Group. And we have a couple of topics that will be covered today. That's concerning money matters, retirement, and some topics on wealth strategies. So for this session, we have 4 speakers who will be speaking today. We have Dan K. Ombiro, who is the head of pension advisory services at Larson Group. We also have with us Victor Mkwanja, who's the manager employee benefits. We also have Evelyn Mwangi, who's also the legal counsel for Larson Wealth. And finally, we also have Dennis Karanja, the general manager, risk and insurance, and also with the regional business. So moving on, just another reminder again, ensure that you subscribe to this event. Remember, we have only a 7-day window to subscribe and claim the points. So ensure that you're able to beat the deadline and subscribe as soon as possible. Just a few ground rules before we get started. All participants are going to be muted during the entire course of this session. So if you have any questions, kindly use the Q&A tab so that the speakers can track your questions. And this will be responded to at the end of the session, while some of the questions will also be responded to live during the session. Please note that this session is being recorded and it will be made available on the PSK's YouTube page. So at this point, I think we'll also be having our CEO coming to give some remarks. I think she'll be coming in at the end. But at this point, I'd now like to welcome Dan from Larson Group, who's going to be starting off the presentation. And Dan, maybe you can also let me know if once your CEO is able to join, you can also give some remarks before the actual presentation also starts. So you can just let me know. Yeah, but welcome.
All right. Thank you, Hezron, and good evening, ladies and gentlemen. My name is Dan Gobiro from Liaison Financial Services. That's the pension side of Liaison Group. And I think I'm happy to be with all of you here today to talk about some important matters which often we don't talk about. So, Hezron, as you've mentioned, I'll be joined by my colleagues um, um, during this session. So, being the first one, probably I'll just do a quick recap about who Liaison is, what we do, as I also get into the topic which I'll be discussing about, and that will be on retirement preparedness. So, with that, allow me to just go straight to the business of the day, and I'm gonna project my presentation. Okay, I hope my screen is on presentation mode from your end. Probably you could
Yes,
just confirm. Great.
yes, it's okay.
Okay, so I think once again I'm delighted to be here with you all from the pharmaceutical or members of the Pharmaceutical Society of Kenya, and I really appreciate, of course, the leadership for creating this space to have this conversation. And as I've said, it's an important conversation. And you as pharmacists, you dedicate your careers to improving the health and well-being of others. So today I'm inviting you to just really turn the same care and the professional discipline inward for our own financial health and really long-term security. So retirement preparedness it's no longer distant concern, or it's no longer reserved for the end of one's career. It is an active, ongoing process that it really evolves alongside our professional growth. So, with that, the retirement landscape in Kenya, it continues to change over time. So today we'll be talking about two key highlights. That's on majorly on the National Social Security, which is the national savings platform, and it's been really evolving for sure over time. And I'll quickly recap about what's going on around that space, and at the same time, will bring us up to speed on what other areas or which other areas or platforms for taking care of these retirement needs or retirement planning for as we continue with our careers. So quickly, Liaison, of course, it's a company founded way back in 1981, and its offering include risk and insurance. We also do offer healthcare administration, pensions, which today I am speaking on behalf of that area that Liaison Group offers. The same time, investment consultancy, and our newest baby, Liaison Wealth, which my colleague Eve will be talking to us about much later on in the course of the presentation. So, of course, our offices are located at Liaison House. That's in Nairobi State House Avenue. So if you want to locate us, you can be able to find us there. We also have regional offices, our branch being at Mombasa and across East Africa. That's Tanzania, Rwanda, Uganda, also South Sudan. That's in Juba, and the rest of the world. So that's who we are and the services we offer. And quickly, I'll just go to the highlights of the day. Um, and as I mentioned, I want us to talk about really retirement preparedness. And I hope my slides are moving, Dr. Hezron.
Yes, they're okay.
Great. So every time we think about retirement, most of the time, and I believe when we look introspectively, this is sometimes how we feel. We fear. There's an element of fear, and some of these fears include the sudden loss of income. I think that's the main fear of many people in Kenya. The thought of really losing that monthly, and I think we have gotten into a point in our country whereby let me call it, we are addicted to our salaries. We cannot live without salaries. So that sudden loss of income becomes really a fear, a real fear. And the other is on retiring with unmet financial obligations. We all have our big dreams, and we all want to, achieve certain goals on terms of financial obligations. So, some of the fears our fellow Kenyans feel is on just thinking about retirement is that, and also on debt. I think there's no one I mean, many people have debts, and sometimes you find that people are paying loans until when they are retiring. So that's also the other thing, and also retiring with insufficient benefits, and that's been the realest reality in our country until the government has had to come and really enhance the existing laws on what we are saving as a country. And we'll be talking about that shortly, and that's on the NSSF. So, having looked at that, the question is, why should we be able to plan for retirement? And as I mentioned in my introductory remarks, is retirement is not about a season in our lives whereby we wake up one day when we are just about to retire. That's when we are thinking about it. Retirement is a journey. It's a journey that starts, and I normally say it starts when you first get employed, or you first get into business or something. The moment you're starting to make money, or the moment you're done with school, that's exactly the time when you should start thinking about retirement. Because with that, there are certain realities which are ahead of us, and we can only protect ourselves by actively engaging in activities that will assist us, the issues to do with rising healthcare. I believe today, if we talk about healthcare, the cost of healthcare in the 1990s, and the good thing is you guys are in that sector, that's the pharmaceutical world. I believe the cost of Medicare or medicine is not the same as it was 10 years ago. So you can imagine 10, 15, 20 years from now. And also the aspect of the increased standards of living. We are used to very high standards of living. We're used to showering with hot water. And sometimes when we think that, or when you can imagine going home to retire and you have to shower with cold water. Issues to do with inflation. I mean, I don't need to really talk much about inflation. We all understand how money aspects work, how the degradation of money over time, also the to protect post-retirement lifestyle. So questions to ponder on is, one, is the amount I'm saving and investing on pace or on equal to the money I'll need for retirement, or for the retirement lifestyle I want? The other thing we need to ask is what strategies may I increase or what strategies may increase my odds of being able to sustain my desired standard of living throughout retirement. So I'm here today to address these two questions, and the solution really is to have a solid plan, and it's quite simple to do that or to achieve that. um you'll come to see that in my next few slides. So the topical issue I'd like to address right now is on the new regulations on the enhanced contributions for the mandatory scheme. That's the National Social Security Fund. There has been quite some significant development around this area, and it's important for us to really talk about it even in platforms like this when we are addressing issues to do with finances. So for that, there's been a new act which came in place actually it was assented in 2013. However, it was implemented in 2023, which saw the increase of the national savings from 200 shillings that we are used to 6% of pensionable pay pegged on two tiers. That's tier one and tier two. So with that, really, I'd like to quickly talk about what's going on around this space and what you, as probably employers, or if you participate in schemes out there, what you can be able to do and what liaison offers. And you as members of PSK can be able to take advantage of. So with that, we have new rates of NSSF being 6%, and it's been split into two tiers, as I mentioned. That's tier one and tier two. And for that, the contribution rates is an aspect called the opting out. So this involves contracting out tier two contributions, which it's been permitted by way of application. Employers have an option to opt out the tier two. So what is this tier one and tier two? Quickly, I know I have limited time. I need to check my timing, so you'll understand if I'm moving quickly in my with my presentation, because we have limited time. So talking about the contribution split, that's tier one and tier two. Tier one targets the minimum basic level of benefits, while tier two targets the level of income replacement. And for that, the contributions under tier two are as set as prescribed on earnings between the lower and upper earning limits. So with this tier two, the interesting bit about it, and I'm sure you've heard about it even other platforms, you have the option to contract out tier two contributions. And it's been allowed for employers who either operate or have established or participate in schemes which meet what we call a reference scheme test. So, having that thought in mind, let's understand why it's important to think about it, because this increase in contributions is not something very small. You can imagine we moved from a simple 200 shillings to right now the highest contributor in NSSF is, or if you're earning salary of over 108,000 of pensionable pay, you will be contributing 5,900 and is it 65,960, about 6,000 shillings. So you can see this is not something or it's something worth thinking about. So to quickly understand where these 5,000 is coming from, as I said, the NSSF Act came into implementation in 2023, and with that, we moved from a fixed rate of contribution of 200 to a percentage pegged on law and on limits, on earning limits. So in 2023, we started with the lower earning limit being 6,000, while the upper earning limit being the 50% of national earnings average. So the national earnings average, as at 2013 statistics by the Kenya National Bureau of Statistics, was around 36,000. So in 2023, upper earning limit was half of that, being 18,000. Quickly, all the way to 2026, where we are currently, and that will be effective this February, we moved from 6,000 2023, 7,000 2024, 8,000 2025, and now we are at 9,000 being the lower earnings limit, while the upper earning limit being 3 times the national earning average. So I want us to focus on this tier two now. These 3 times national earning average. To quickly understand, to quickly look at this math, if tier one is 6% of the lower earnings limits, that's 9,000, we'll get, this month will be deducted 540 shillings to go to tier one. While tier two, it will be 6% of the difference of the upper earning limit and lower earning limit. Upper earning limit being now, I said, three times the national earning average. So when you do 36,000 times three, you'll get 108,000. So 108,000 minus the lower earning limit being 9,000, you'll get 99,000. If you do 6% of 99,000, you'll get about 5,900. So having understood that high increase in the contributions for NSSF, what options are available for employers? And this is where now I want us to put our focus in. Employers have been allowed to consider, they call it contracting out. Other people call it opting out. This tier two, the 5,900, which I have really quickly broken down. And as I said, you'll forgive me, I'm rushing because we have very limited time on this webinar. So this tier two, as I was saying, you have an option to contract out. But the question is, why contract out? Why not, why leave it with just an SSF? Um, Probably most of us who are sitting on this room or who are in this webinar today have only the NSSF as their retirement savings. But question is normally, is it enough? And as I started my presentation, the question on the need for retirement was it's something that really lingers in our minds. So what can we do with this little that now we have been able to, or we can be able to save through the National Savings Platform? I'd like to introduce you to our retirement plan registered by RBA, called Liaison Mafao. And Liaison Mafao is an individual pension plan registered to take care of individuals who would like to, you know, take care of their retirement needs. So with these, it's for categories of how can I call it? Uh, Categories of the people in our economy, like you guys, who are maybe operating small businesses or big businesses, and you probably do not have an occupational scheme. You have only the NSSF. So for that, what I'm proposing to you is to consider, when we say contract out, it does not mean not remit or not contribute. What I mean is, NSSF, I believe, and as all of us understand, is a mandatory contribution. When I say opt out tier two, or it means, I see it simply means, as opposed to remitting the tier two contributions to NSSF, instead remit it to your private schemes. And I am introducing you to our registered scheme to receive this tier two. But let's understand why I am proposing you to consider this. One, competitive returns. The beauty about this new NSSF Act, it introduced the element of employers to make considerations on where they'd like this tier two to be taken care of. And as I said, at the end of the day, you have to remit. Question is, where do you want it to be taken care of in terms of investments, administration, and the rest? So one, our Mafao fund will assist you with, or will help you achieve better returns, as the fund is managed by fund managers who have been able to achieve superior returns over time, and I'll be able to show you the historical returns. Secondly, is on personalized services. And for that, you'll be able to really get access, or to have us, you know, partner with you as an organization to, again, things to do like sensitization to your employees, things to do with statements, or you'll have access to our 24-hour call center and be able to really just get the benefits of having an administrator. And lastly is the question of value addition. The moment you contract out this tier 2, you will be receiving statements from Liaison. We will you will have an individualized online platform for you to be checking your contributions anytime you want, and you can enjoy that platform at any time. So, as I mentioned, this Mafao Fund is an individual pension plan suited for employed and self-employed, both in the formal and informal sector, and it allows you to build your retirement income by making contribution into this scheme. So, of course, as I said, it's registered by RBA and KRA, and for that, there are several benefits in being in a retirement scheme. And for that, I'd like to talk about the benefit of contributing in a scheme registered by KRA. KRA. One is on taxation. Um, um, you get to enjoy, for every contribution you make into a retirement scheme of up to 30,000, you get to enjoy that amount being tax deductible. What do I mean by that? It means that for a contribution you make into this fund that I'm proposing to you, Liaison Mafao, any amount up to 30,000 will not be taxed at payroll. So for that, you get to enjoy the tax benefit of saving in a retirement scheme. This is just a quick snapshot of a historical return. It's been always a double digit over time. So for that, don't want to spend. I'm being told my time is running out. So let's quickly really understand what steps you can take as I close to start saving early. One, the benefit of being with this individual pension plan, not only will we take care of your NSSF tier 2, but also you will get the advantage of what I normally call the eighth wonder of the world, that's compound interest. So this slide really demonstrates to you what as little as 1,000 shillings that you can put aside can do to your retirement savings. If today maybe you are 30 years old, and I'll just use an example of maybe 1,000 shillings, and this is per month, not per week, not per day, not per month. If you can be able to do that on top of, forget even the, sorry, on top of the what you're already contributing with an SSF, you within 20 years you can you'll have, or with the time you'll have before retirement, you'll have 723,000. So you can imagine what 5,000 can do for you, or 10,000. So this is just an um, uh, you know, my call to you to really consider to enhance your retirement savings, and consider topping up. One, contracting out tier 2 for the reasons I've talked about. That's from better returns to personalized services to active monitoring of your financial goals. Secondly, is on considering the individual, what we normally call the voluntary contributions. So for that, as I mentioned, you'll enjoy not only the tax benefits, but also the advantage of just the compound interest and having a solid retirement plan. So allow me to stop at that. And of course, you can be able to reach us anytime at our offices at Liaison House. Our contacts at 07, as shared there. You can reach our 24-hour call center. That's 0703 071 111 or 177 or 137. Our email is on pensions, specifically on pensions matters. Will be on pensions@liaisongroup.net. So thank you very much. I know I've taken around almost 30 minutes. So I'd like to hand it back over to the moderator to introduce the next speaker. But if you have questions, please feel free to fill the chat, and I'll be happy to respond at the end. Thank you very much.
Thank you so much, Dan, for that presentation. Members, if you have any question, kindly put it on the Q&A chat, Q&A tab, so that you'll be responded to. Now we'll move on to the next activity where we have Michael. Michael, if you can hear me.
Yes, I can hear you.
Welcome.
Good evening, everyone. Dan, if you could please end your sharing. So we'd like to make this session a bit interactive. So please, on your screen, please, Daktari, confirm if you can see my screen with the QR code.
Yes, yes, I can see.
So please, to the viewer, to the audience, please scan the QR code, or uh, uh, you can use your browser to go to Slido. Here's there 1561.221. We have a few series of questions that will inform the next presentations. So it would be good if you can sort of join in and we make this this session a bit interactive. So as guys are joining, we'll post the questions, and you'll be able to answer as they appear on your screen. So the first question is, have you ever thought about a legal way to protect your family's wealth and ensure it benefits your loved ones in the long term? Have you ever thought about a legal way to protect your family's wealth and ensure it benefits your loved ones in the long term? So please scan the QR code or go to slido.com and use the code, and then you submit your answer. I'll give you about 30 seconds to do this as the next presenter starts the second session. So please keep answering as you see the questions. The second question is, have you thought about ways to grow your money for the future? That is not necessarily real estate. So you can answer both questions and submit the answers. Thank you so much for those who've been able to answer. So for the first question, majority have answered yes. It's good to know that guys have really thought about how they can be able to protect their family's wealth, and the next speaker will come in handy in sort of showcasing or telling us how to go about protection of the family wealth. In the second question as well, it's good to see that quite a number, 88, 89, thereabout, have said yes. They've thought of how to grow money in a way that is not really Kenyan, because in Kenya, it's real estate that is what is termed as investment. So it would be great to hear about the alternate investment options that we can use to grow our money. So from this juncture, I will take it back to the moderator, and maybe the next speaker can pick it up from there.
All right. Thank you so much, Michael, for that activity. And I also see some of the participants have been just typing on the chat. Thank you for your participation. So we'll now move on to the next speaker, who's going to be sharing more on so maybe you can just share your screen, Evelyn.
Good evening, everyone.
Good evening and welcome.
Okay, it's a pleasure to meet with all of you today, and I'm glad to see that majority of the people are aware of about how to protect their wealth and investing in other asset classes other than real estate. So I'm Evelyn Mwangi. I'm an advocate of the High Court of Kenya and legal counselor at Liaison Wealth. So in Liaison Wealth, we have a multi-family office, in which we specialize in corporate trusteeship for family trusts. We also offer trainings to various corporations and offer investment
Evelyn, I think
services, either as a standalone or under our multi-family office.
Dan, I think
when you look at
breaking
statistical data, and this is data provided by KNBS, you are going to notice that we are really in the red line as a society. For instance, 45% of households in Kenya are single-parent households, while the total dependency ratio is at 68%, and the poverty rate is at 39%. So you can see that there's a problem in generation of wealth as well as preservation of the same. Oh, sorry. Dr. Is that better now? Can you hear me?
Yes, yes, it's much better. I think we're not initially hearing you well when you began your presentation. Yeah, but now it's much better.
Okay, sorry about that. So statistically, you can see that depletion of generational wealth is at 90%, meaning that the first generation is great at creating wealth, the second depletes it by 70%, and the third depletes it further by 90%. Therefore, the fourth generation really technically do not have anything to work with. And this is where now a trust comes in. So the gaps that we address include one, creating and preserving generational wealth, where a family trust is able to create the wealth, and this is done through our investment advisory offering. So what we've done is we've partnered with various fund managers in the market, and we are able to advise all our clients on portfolio allocation, rebalancing of the same, as well as distributing the same according to a settler's trust deed and rules. So the settler is the person who founds the trust. This is the person who creates it. He's the founder. He or she is the founder. And then they tell us who the beneficiaries are. Meaning when the trust creates an income, there are various distributions that are made to the beneficiaries. For instance, medical, educational, travel, or even entrepreneurship. And then Liaison Wealth comes in as the corporate trustee. And the role of the trustee is to manage the assets that are in the trust. And these assets can be financial or real estate. And the benefit of having the trust as the holder of all these assets is, for instance, if you hold real estate properties, when you decide to transfer them into the trust, you are exempted from stamp duty. The trust itself is treated also as a legal entity on its own, which is separate from you as an individual. And what that means is, in future, if you end up having bankruptcy proceedings, the creditors cannot come after the assets that are held in the trust. They can only come after what is held in your name or the certain company that you are running the business with. The other good thing is that a family trust is always exempted from probate process. So what this means is that in case a settler passes on, his beneficiaries or his or her dependents do not have to go to court. When you leave a will, your dependents will still have to go to court for confirmation of grant. Through a trust, they do not have to go to court. The trust keeps running as you had prescribed it to run, with the mechanism that you had set it to run on. And that really saves so many families time and wrangles where they're fighting over property. The other thing is that for you to have a trust, you don't really have to wait up until old age or retirement or sickness to start. You can start this journey at this particular time and moment. You can have a living trust where it can be revocable, and then upon your death or being held to be mentally incapacitated by a certified medical practitioner, now it becomes irrevocable. And the good thing about it is that the journey is personal, but the impact that it has to your beneficiaries is very much generational. The other thing at Liaison Wealth that we consider to be a great benefit is we have a co-governance structure with all the parties that are in the trust. So the settler as the founder, us as corporate trustees, and enforcers. So enforcers are the people who come in as auditors of the trust. So they ensure that whatever you had prescribed in your trust deed and rules is exactly what is being implemented by the trustees. And that is a good thing because you really don't have to run into wrangles later on regarding mismanagement. So there's already an established system of checks and balances while you are alive, and you can be satisfied that even in your absence, your enforcers will still have the same role of ensuring that trust property is being created and generated for the benefit of your beneficiaries. So we do have a multi-generational mindset where we want this trust to survive. If you noticed in my earlier slides, there was that issue of generational wealth being depleted by 90% when it gets to the third generation. When you have a corporate trustee with a proper trust deed and rules and a co-governance structure with enforcers, these can be easily prevented. Would be able to create wealth and distribute it by the needs that or the objectives that you had stated. If it's paying school fees, if it's taking out a medical cover, if it's taking out a travel policy or paying for travel for the family to ensure unity and harmony, we are able to do that. The benefit of also having us as corporate trustees is we have the expertise and resources that one particular individual trustee cannot have. And these are the issues that you see mostly in courts. The trusts that have issues are the ones where someone came up and elected natural persons as trustees. You've elected your sister, mom, father, but they do not have the requisite expertise and skills to run the trust. And this brings in issues and wrangles all over again. And Liaison, we have lobbied successfully for various laws and acts that are very suitable to running of trusts. So for instance, and this has been a journey that we've been on since 2021 up until now in 2025, where BRS wants to be a regulator and they have brought in a trust administration bill. So we are really hands-on in terms of what the law is, how the law is being amended, and ensuring that the protections that a family trust offers to people during estate planning crystallize and they are not watered down. And if you want to start your journey with us, we are available. You can contact us on call, you can email us, and more importantly, you can visit us at Liaison House. We are always available, and we are happy to take your concerns and walk with you through this journey. It's very personal, but the impact is generational. So I'll be taking any questions you have in the chat box. And the moderator can now commence introducing the next person. Thank you, Dr.
Right. Thank you. Thank you so much, Evelyn, for sharing that information on wealth and trust. So we're going to have Michael coming in again. Michael. So maybe you can confirm, are we going to scan it again and continue, or this, you can just guide on that? Michael, I think you're not audible.
Sorry about that.
Oh.
Can you hear me now?
Yes, you can hear you.
Okay, so I was saying the users can be able to use the same browser as they used before, or you can re-scan the code or go to slido.com and answer the next series of questions. So the first question is, what's the most common sound-alike mixer you have ever had? So I will not attempt to say say the answers that as I see them, because I will expose myself as not being a medic. So I will not try to attempt, but I can see guys have started answering that one. The second question is, how would you describe the worst handwriting you have ever seen on a prescription note? Interesting. Let's keep answering. Let's keep the session engaging. The third question. Let's keep the answers coming in as the next presenter prepares himself. Thank you so much for answering. I think the next presenter is taking note of this as he prepares for the third presentation, sorry. I'll give you about 15 seconds as we move on to the next presenter. So thank you so much. You can see the results from all the questions as they're displayed. I think I am one of the guys who said I Googled it. Google is my first doctor. So thank you so much. Thank you so much. I'll take it back to the moderator for the next presentation.
Great. Thank you. Thank you so much, Michael, for that activity. So we'll now have the next speaker. That is Victor. Victor, if you can hear me. Meanwhile, I'd just like to encourage all the participants, if you have any questions, kindly just put them on the Q&A, and then they'll be responded to by the presenters at the end of the session. And also, for those who've not subscribed to this event on the PPB portal, ensure that you do so. Remember, we only have a 7-day window to subscribe and claim the event. as required by the Pharmacy and Poisons Board.
Sorry, hello everyone. My name is Dennis Karanja, not Victor. I think Victor will be coming next. So please, Daktari, confirm you can hear me.
Yes, Dennis, I can hear you from my
Can
end.
hear you, sorry about that.
All right, thank you very much. So I'm going to take us through the professional indemnity and slightly about product liability. And thank you, Michael. The last session was fun. At least we know what happens sometimes and the oops that might happen when someone is working out there. Especially you've presented a question on the sound alike, and I also know there is also look alike. So I hope also look alike, we're also going to consider it. So professional indemnity is a policy that is taken by professionals, as the name suggests. And these are not all professions, but nowadays the professions keep increasing. So you find doctors will have these policies, lawyers, insurance brokers like ourselves, anywhere where you give advice and where it can impact another person. Professional indemnity is quite important. So the coverage, it covers the legal liabilities arising out of breach of professional duties. This also includes omissions or even the commissions and errors. So like what we are talking about, maybe it's a doctor's handwriting that someone never read so well, and then there's an omission or an error. So we do have a policy that would cover the legal liability that would arise out of that, because that might cause harm, bodily harm, emotional harm. And so there needs to be some financial protection to protect against that. So who is covered in a policy? The insured, be it a corporate or an individual, could be an employee of the insured, and also could be a partnership. If it's an individual, it's okay. If it's a partnership, or anyone who is acting on behalf of the insured. And who needs this cover? An individual pharmacist would actually require this cover because of, say, dispensing errors or any other errors. A wholesale pharmacy, also a retailer, and also the consultants who also give advice. Eligibility for this policy in Kenya is someone who is registered and operating in Kenya as a member of a respective association also. So you have to be registered by the Pharmacy and Poisons Board and also be a member of an association. This is important because, see, like what we are discussing today, PSK has organized this sensitization program, which means professionalism is key. So being a member of an association is actually something we consider when you come looking for professional indemnity policy. So what could go wrong? Just like the three questions suggested, could be an incorrect drug information or labeling. So maybe it was supposed to be 1 times 2, then it was labeled 2 times 1, and it ended up having causing a physical or bodily harm to someone. Could be dispensing errors, could be dishonesty. I don't know, maybe someone asked whether this contains sulfur, and you said, no, it's okay, you just have it. And then there would also be disciplinary hearings for that. Failure to report adverse drug reactions. Actually, yeah, someone can take you to court for not reporting. Professional advice that is given to a patient. Maybe someone comes with a prescription. You don't have that specific medication, then you advise them you even have a better one. Then it leads to harm, unfortunately. So all those, there are no more day-to-day errors, defamation, and breach of confidentiality. Of course, medical information is confidential, and someone would actually run to court if they knew that you either mentioned to a neighbor or a colleague the medication they're having. Loss of documents, it's also covered. So for professional indemnity, Liaison has been offering this for some years now. And what we did for individuals, we have packages so that from the outside, as long as you're in the association, you are registered, you can actually know how much premium you are likely to pay for a certain limit. So as you can see, all the way from 5,000 Kenyan shillings, you'll have yourself a cover up to 5 million. So if you need a limit of about 5 million, because I know some of you deal with a certain profile of clients, and maybe the 5 million may not be adequate in case of any errors or omissions. That one now we have to do our underwriting separate. So that's why it's not part of this. So anyone who feels like they actually need this protection, it's a financial protection, because in case something goes wrong, you have to spend, you have to get a lawyer. The cost of legal fees only is actually high, even without the court award, in case you win that hearing. So it's an important cover to have, and at least you do have our contacts, and you can let us know. I will answer questions at the end of this session, but briefly, I also want to mention about product liability, because I understand some of us here are also in the manufacturing side. So you might be okay on the professional side, no errors, no omissions, and then there is an issue when you're handling a product. This can cause either death, unfortunately, or bodily harm, or even if it's an equipment, it can cause damage to another person's equipment or property. So anything that you have either manufactured, assembled, processed, modified, anything that has passed through you and is seen to be part of production or manufacturing or handling of a product, that would actually be covered by this policy in case it causes harm, including the packaging and containers of those products. So someone who is even in that sector of containers is actually able to get this cover, because the proximate cause might be coming from a defective condition of a container. So who would need this cover? Pharmaceutical manufacturers. I'm sure some of us here belong to that segment. Also importers and exporters, since they're handling. Sometimes you don't know where a harmful product came from, whether it was mishandled all the way from overseas, or is it here at the wholesalers, retailers, and also even the contract manufacturers. Also, the company is doing labeling or branding. Also, something can arise out of that, and you would be held liable. So, who is eligible? So, any pharmaceutical company registered and operating in Kenya, and also a member of the association. And so, what could go wrong in terms of product liability? So, a product can be contaminated. And if it's contaminated, whether or not it has caused harm, actually you're going to incur costs if it is actually proven that it was your mishandling or omission that led to that. Adverse reactions to medicines, incorrect dosage, a manufacturer maybe never gave the correct guidance, or it was not well labeled, the warnings were not there, and something has happened. So a patient will indicate that they were never warned, and they never expected that. Package defects, like I had mentioned, these are covered. So for this one, we do not have a pre-designed package. This one is considered on case-by-case basis. Of course, we look at various factors, some of which we have listed. Type of product, over-the-counter medicine, they are considered to be less of a risk as compared to prescription only. So we look at that. The turnovers that maybe how many products we have out there. The limits of liability chosen, we do have from 5 million all the way to even 100 million. We are issuing currently in Kenya. The geographical spread where your medicine are going to reach, and also the risk management and compliance controls in that organization. So that is the end of my presentation. Thank you very much. I hand it over to the moderator.
Right. Thank you so much, Dennis. and also just for sharing the applicability in our industry on who would actually need the professional indemnity. So we'll have Michael again coming in just for a short engagement, and then we'll finally have the last speaker coming in, and then we have the Q&A. Members, just to encourage you, continue sharing your questions on the chat. They'll be responded to as the session continues. Thank you.
Thank you so much, Daktari. A minute as I set up the final one. So it should be on your screen right about now. So on the last bit, we'll be talking about a topic that is considered taboo in Africa, but somehow with the changing times, we sort of need to start the conversations around it. So the first question is, how many WhatsApp groups or contributions forms have you contributed to over the last 1 year? I think myself, just from January, I should be on around 5. Just January 2026. The second question is, on average, how much do you contribute on these groups? So anything might have happened and you just find yourself added in our is, for how long can your emergency fund sustain your dependents for? For how long can your emergency fund? It's okay if you don't have an emergency fund. We have an option for you. That is a few hours, and quite a number have that as an option. So question 1 is, how many WhatsApp groups or contribution forms have you contributed to over the last 1 year? Okay. So it's quite a number for the past 1 year only. In terms of the average, it's at between 500 and 1,000 shillings, mostly, with quite a number contributing more than 1,000 shillings. The third question was, for how long can your emergency fund sustain your dependents for? Interesting. We have quite a number that have a fund that can take them a few months. That's good. And we have a number that cannot last a day. So I'll give you the next 5 seconds as we continue answering, as the next speaker prepares for the next presentation. Thank you so much for taking part in this interactive session. Yeah, so I'll take it back to the moderator and to introduce the next speaker. Thank you.
Great. Thank you so much, Michael, for running that session. I think it's interesting to see the different statistics on where people fall. So at this point, I'd like to welcome Victor Mkwanja, who's going to be taking up the next session. So Victor, karibu.
Thank you very much, Daktari, and good evening, everyone. It's a pleasure to join you today. So by way of confirmation, can I just confirm that you're able to see my slides?
Yes. See.
Great. Thank you. Thank you very much. So it's very interesting, the statistics that we've gotten from the quick poll that we've done. And I'll take you back to my earlier days in college. There's a professor who made a very unpopular opinion that humanity is faced by three realities, though he called them tragedies, but I prefer to call them realities. That one, you can live for too long. So you're blessed with a long life and you get to experience it to its fullness. And the second reality is that you can die too soon. So that would mean that, for example, if there are dependents, then they are faced with a case of a loss of income, especially if you are the breadwinner. And the last tragedy, or what he called as a reality, is that you can become disabled. And really, today's conversation has been trying to provide some form of reprieve to those three realities. That our pension scheme, our pension solution through the savings ensures that if you get to live for too long, then you have something that can be able to sustain you through your sunset years. If you become disabled or if you die too soon, that is what is giving birth to this conversation, primarily on Mfariji, but I'll be able to expound a little bit more on what you can be able to gain as an addition over and above what Mfariji is guaranteeing. So from the poll that we have done, majority of us have been able to participate in about 5 groups over the last 1 year in terms of contribution. And a good number of us were giving between 500 shillings and 1,000 shillings. So in 5 groups, we can safely work with an average of 5,000 Kenyan shillings as contributions towards the community that we live in the event that one of us is bereaved. So that is what informed the creation of Mfariji. Mfariji is a last expense solution that gives you the freedom to tailor a solution that you want for yourself and for your loved ones. So I'll start off quickly on the eligibility criteria. So who qualifies to be insured under Mfariji, which is a last expense solution? That the principal and spouse, so you and your employer, of course, the minimum entry age is 18 years and the maximum entry age is 69 years. So for our parents and parents-in-laws, we are looking at a minimum entry age of 30 and a maximum age of 84. And for our children, they'll be covered from day 1 up to 21 years. And if there's proof of active schooling, then this cover can be extended for them up to age 25. So Mfariji really addresses the basic family unit, that you and your children, and the same way that you are your parents' children, then we are extending coverage to ensure that they get to enjoy insurance. So to bring it a little bit closer to home, and especially making a quick benchmark to the money that you've been giving out on the contribution forms for the past 12 months or so, we are looking at different options of cover that can be tailored to the specific need that you have or whatever you think is available to you as disposable income. So ranging from about 50,000 as a benefit all the way to 500,000, covering yourself, your spouse, two of your parents-in-laws, and up to 4 children. You'd be paying a premium of 2,000 shillings for a 50,000 cover, 3,500 shillings for 100,000 cover, and 5,000 for a cover of 150,000 Kenyan shillings. So of course, this benefit is administered on a graduated basis, on a graduated scale rather, depending on what best fits into what you have available as a disposable income. And the most important point to note here, especially when the question was asked on how much do you have saved up as an emergency fund for your dependents, and how long would it be able to take them for in the unfortunate event that you are not there. So last expense, traditionally, and how it has been positioned in the past, is that a lot of our predecessors were fronting it as a funeral cover. That is it's just money to buy a coffin, to buy a hearse and feed people during the burial. But that is not the primary utilization of last expense. Last expense is the most immediate income replacer for your family. So if, God forbid, a breadwinner is not there today, this money will not necessarily go towards financing the burial, it can serve a bigger purpose than just funding the burial. It can be the immediate income replacer, even as your family comes to terms with the loss, and of course the initiatives that come with consolidating the resources that you would have left them for. So you can be able to choose any of the options that are provided and share details on your dependents for them to access this cover. So of course there are a number of terms and conditions that are very friendly. So not more than 3 members in the same group can insure one life in excess of 1 million Kenyan shillings, which means that if you and your sibling and another of your sibling were to join this Mfariji cover, and you are insuring, for example, your parents for $500,000, then only 2 of you would be able to declare them as a dependent, because then that would accumulate to the maximum benefit of 1 million Kenyan shillings. And of course, if the principal member, who is yourself, if God forbid the principal member loses life, then cover would extend for the entire period of insurance for the dependents that are left. So cover is on a 24-hour worldwide basis, duty and pleasure. So wherever you are in the world, you are guaranteed that this cover is active for you. Of course, beyond 30 days of joining, there are no premium refunds that are processed. And the most important thing to note when it comes to administration of this cover is that there's a 1-month waiting period for the principal member, who is yourself, your spouse, and children. And there's a 3 months waiting period that is levied on our parents and parents-in-laws. So there's no waiting period whatsoever, especially if the cause of death is accidental. That claim would be paid immediately, whether it is in respect of the principal member or the parents that have been declared for insurance. So another important point to note is currently you can be able to insure your parents up to a maximum benefit of 200,000 Kenyan shillings. So the claim process is very simple. Once we receive documentation, especially for an eligible member, a member who had provided a declaration form for dependents, a member who had cleared the premiums that were required of them, then this last expense benefit is dispensed within 48 hours to the nominated or designated beneficiary that you would have given at the point of setting up. Another important point to note here is that children below the age of 10 years are covered to a maximum of 100,000 Kenyan shillings, and this is as per the Insurance Act in Kenya. What is required for a claim to be dispensed within the 48 hours is that we provide a claim form to be completed by your beneficiaries. Will require a valid copy of the permit for burial, a copy of ID of the deceased person, and a copy of ID or a letter of surrender of ID. Of course, we also require a copy of ID of the beneficiary, and in case of children, especially those who have not hit the age of majority, which is 18 years in Kenya, then would require a birth certificate for us to be able to dispense the last expense benefit. And of course, for accidental deaths, then a police abstract report would be required. So there are a few instances that would make the Mfariji last expense benefit not to be dispensed. And that is if the loss of life was a result of breach of law, or driving under the influence of alcohol, or intake of illegal drugs, and active or willful participation in acts of war, civil commotion, or any terrorist activities. So that is a brief on Fariji, and you can be able to reach to us to be able to tailor to you a solution that best fits yourself and the community around you. So we are happy to engage on any questions on the Q&A section of the chat. So back to you, Daktari.
All right, thank you so much, Victor, for that presentation. And I think for some time we'll just get into the Q&A, and I'd like to welcome Dan, who's going to be assisting with some of the Q&A. I see some have already been answered, so if you had asked any questions previously, you can also check on the responses on the chat. But meanwhile, we have Dan Ochilo, who's going to be addressing some of the key concerns that have come up, and just any questions that are still pending. Welcome, Dan.
Okay, thanks a lot, Daktari, and good evening, members and doctors. So it's a pleasure to have this amazing webinar and event. So now we have a couple of questions in the Q&A, and some are being typed in the chat. So I'll start with the pension questions, which my colleague Dan Gobiro will be able to respond to. And the first one was asked by Jibril Osman. He said that it's being deducted 360 shillings only, yet we have the new NSSF Act. He needed some clarification on that. So Dan, maybe you can start with that.
Great. Thank you very much, my namesake Dan. I think with that question, the thing about new contribution rates is these are all employers in Kenya are expected to adhere with the new rates. So in the event you are maybe not up to date with what is expected for deductions, I would like to urge you to kindly reach out to us. We can be able to really help you with just what you need to, or how you need to comply with the latest changes. So I think to the person who has asked that question, kindly reach out to us. We'll be very happy to assist you with that.
Okay, thanks, Dan. And maybe to add to that, our numbers, I can give my numbers: 0727 921 348. My name is Dan Ochilo, 0727 921 348. You can reach out for more. Then, Dan, I'll combine two questions. The first one is, UCABET was requesting for a comparison. I believe that one we can be able to send it to her offline. We'll as we have the discussion. Then another question was from whether the returns are guaranteed. So kindly, Dan, kindly assist with that.
Thank you. On the question to UCABET, at this moment, I have the returns for this particular fund, in as much as also the comparison. If you the comparison for other funds, you can is available for now. Since I have this, I can be able to just show you that historical return which this Mafao fund has been able to offer in the last. These are 7 years. So in 2018, 11.5%, 2019, 10.5%, 2020, 10.8%. 2021 10.8, 2022 again 10.8, 2023 11.25, 2024 10.3. The results for 2024 will be coming. 2025 will be coming out in March, by end of March. So we will be looking out, and I can guarantee you for sure it will be a double digit. And to the next question, whether the returns are guaranteed, yes, indeed. What there is, we have invested the funds in a guaranteed fund, and it's a good question you have asked, because what happens in this guaranteed fund is for every time we are holding your money, we are giving you a guarantee of 5%. That simply means no matter what happens in the economy or whatever happens, we'll be able to give you that minimum of 5%. Come the end of the year, of course, we give you the declared return, which, as you can see from this slide I've displaced, it's been the double digit. So, and again, just to add on, yes, okay, let me just stop at that on answering that question. Yes, indeed, the returns are guaranteed. And on the question on comparison, please reach out to us. I'll be able to send you a comparison of all the market players. But for this particular fund, those are the returns. Thank you. Back to you, Dan.
Okay, thanks a lot, Dan, for that. And somebody is saying that my number is invalid. So there's an error with the 0. So my number is 0727 921 348. You can just drop me a message or a text, then we'll be able to answer all that, and I will be able to engage. Then, so now I would like to go to another question regarding the trust funds. The question is it the same as the one that we have for Rockefeller? There are so many questions around that, and my colleague is here to, Eve is here to respond to that.
Good evening. So when it comes to structuring of trusts, they're pretty similar in terms of the protections that they provide, but they're also a little bit different in terms of the trust deed and actual rules. So, like I mentioned, it is a very bespoke service. So what you want implemented is what you will suggest, and then you'll be able to structure it to meet your objectives. Another key thing with the Rockefeller, as mentioned by one of my colleagues, is that for them, every death matters. And what this means is that they've taken life insurance policies on every new additional beneficiary. So if you pass on, your payment comes into the trust, and that keeps growing the assets that are in the trust. So if that is something that you as a settler or a founder would want to have, it is something that we can have implemented in-house with with our various business lines. So yes, it is possible. The other questions that I've seen are regarding trust setup fees. So we charge a one-off payment of 100,000 Kenyan shillings exclusive of VAT. So that covers advisory, consulting, drafting of the trust deed and rules, as well as incorporation with the regulatory bodies. And then we require a minimum investment amount of 500,000 Kenya shillings, either in cash or cash equivalents. And for our management fee, it is 2.45% per annum. And we only charge it on the productive assets of the trust. So if you have real estate that is bare land, we will not calculate that when charging you our management.
Okay, thanks a lot, Eve. I believe that one is clear. So now the additional questions for pensions before we go to the insurance part. So I would like to invite my colleague Dan to respond to them, and then you can also share your contact in case a member wants also further clarification. So Dan, back to you.
Thank you. I can see there were other questions, and the first being, can someone have several pension schemes? And in brackets, you have asked, especially those in government. The answer is absolutely yes. Nothing stops you from opening up an individual pension plan. Even if you are an occupational scheme, nothing stops you from opening an individual pension plan, and one of them being what I've been advocating for, the Liaisons Mafao Fund. So for that, it's the contributions are flexible, meaning that there is no minimum and there is no maximum. And again, to tie it on the second question, which is if someone faces serious financial crisis, can he or she withdraw from the plan and be given given his or her money on full without deductions? So the thing about first of all, to just differentiate this question between the NSSF and the voluntary contributions that I'm advocating for. NSSF contributions can they can only be accessed at retirement. Even if you contract out or even if you opt out, you can only access those benefits at retirement. So they follow the NSSF regulations, no matter whether you are with NSSF or you are in a contracted out scheme. However, for these voluntary contributions, the additional, which I'm encouraging us to do, you can be able to access at any time. Whenever you exit the scheme, you can access and you will get it together with the interest, together with the compounded interest. So that is the beauty for whenever you face a financial crisis, those voluntary contributions that you had made, you can access them and we are going to pay you that money. And that ties to the last question which somebody asked, how do we submit tier 2 to you from NSSF? And you have gone ahead to say, give step-by-step guide, not a general answer. So thank you for that. I will give you a very straightforward answer to this. For you to initiate this process, and as I mentioned, Liaison, we have been authorized by RBA to assist employers like you to contract out. Now, the first step you will do is reach out to us, appoint us by way of appointing us to undertake this undertake this activity for assisting you to contract out. So I think from the contacts you have been sharing and all of that, you can even reach us. In fact, we will assist you with drafting the appointment letter. So that's the first step. Once you appoint us, we will draft the necessary documentations, which all you will need to do is sign. So I will just give you the documentation. All you do is sign here, sign here, sign here. Once that is done, we are going to apply to you. For you to RBA. So I think from the author of this question, I hope I've given a very direct answer to this. First, appoint us, and the rest will everything else will just follow. So nothing complicated. All I'll ask you is sign here, and the next thing you know, you will be ready to start contributing to the Liaisons Mafao Fund. Great. So that's it. Thank you very much. Back to you, Dan.
All right. Thanks a lot, Dan. So now we move to the insurance there. I would like to invite my colleague, Dennis, to answer a few questions. I know some you already answered through the chat, but I believe you can probably emphasize more. Of course, for example, the question of if a corporate entity has an indemnity cover, are the employees covered automatically, or do they have to get personal covers also? So Dennis, the floor is yours, as you can also answer all the possible questions that were asked. Karibu, Dennis.
All right. Thank you, Dan. So that question from Daisy. Yes, employees are automatically covered by the corporate cover. So we said that if the insured is a corporate, anyone working for the insured is actually covered under this policy. But now it is still advisable that an individual professional have their own policy. The reason is because sometimes we do have cases where an employee was in the wrong, and then the employer decides not to have the claim under the corporate cover. Say, for example, they considered it as a gross negligence. So you find that an employee, if sued as an individual, the employer might decide to just let them handle their own issues. So for that case, it's also advisable to have an individual cover as an employee. Then the next question came from Paul Mwangi about the premium, whether it is annual or monthly. It's actually annual. So once you pay that amount, you are covered for the whole year. There was another question from Nahil Dev. We need a professional indemnity cover for pharmacists in Kenya, covering administration of medication and recommendation of medication to manage minor ailments. All insurers I have spoken to so far skirt around these key aspects of pharmacist cover. Are you going to do something about it? And yes, Nahil, we actually saw that gap at Liaison, and that's why we are here today. Yeah, there has been an issue with getting a cover for pharmaceutical professionals. The covers for doctors, lawyers, engineers have been there since insurance began in Kenya. So for pharmaceutical professionals, we do now have a policy, and that's why we even have the premium, like I indicated on my slide. We do have a premium for the individuals, and for corporates, we are able to come up with a premium based on the information we receive about your operations. So yes, these issues that you have mentioned here, it is now possible to cover them. Let me see whether there was another question. Yes, the last one was from Nelson. Can the premium be paid in installments? Yes, we do have installment options. Yeah, we are flexible, and especially to anyone under this PSK group, yeah, we do have this to offer. Yeah, so my number, in case of any other question or clarification, is 0724 455 938. Thank you. Back to you, Dan.
Okay, thanks a lot, Dennis. And it's good you've shared your number. I believe you can also chat your number, Dennis, so that the people who did not hear it can get it loud and clear. So now we are going to Victor Mkwanja. There are a couple of questions. Number one being, is Mfariji package individual or group based? So Victor, you can clarify on that. And also other questions like, does the cover include deaths from suicide cases? etc. So Victor, the floor is yours.
Thank you. Thank you very much, Dan, and thank you for those questions. So we created Mfariji specifically for people that cannot form groups, because other products in the market were requiring that you meet a minimum threshold of like 15 members or a minimum premium threshold of 75,000. But the beauty of Mfariji is that you don't have to belong to a group. You can join today as an individual. The second question was on whether or not the claim includes suicide cases. And yes, it does. So death by suicide was decriminalized in 2024 in Kenya. So if God forbid a member was to die by suicide, that claim would be paid in full. So there was another question on a declaration of being a drunkard, whether that would be excluded when it comes to insurance. And the answer is that the only point where that exclusion would apply is that now somebody unfortunately exposes them to risk that leads to loss of life as a result of having drunk themselves stupor. I think those were the questions. Dan, back to you. Thank you.
Okay, thanks a lot, Victor, for that. I believe more questions are coming, and as they come, we'll be able to respond to them. Guys, Victor was able to type his number, but Victor, you can as well repeat it for the members who are not able to read the chats.
Thank you, Dan. My name is Victor Mukwanja. You can reach me on 0726 033 372, and I'll be able to offer you assistance on Mfariji and any other life product or life solution that you'll be looking for in terms of insurance. Thank you.
Right. Thanks a lot, Victor, for that. So now we hand it back to Daktari to take it over from there.
All
Victor,
right,
share your number on the chat. Okay, sorry, Daktari. Victor, there's a request for you to share your contact on the chats. And we are getting some good compliments. People are saying that our presentations were nice. And yeah, we're looking forward to more. Back to you, Daktari.
All right, thank you. Thank you so much, Dan. I think we are coming to the tail end of the session, but I'd just like to just give an opportunity for each of you to give a parting shot in just 20 seconds, and then we can now close the session. I saw our president was present during the entire session, but she's unable to speak for today. That's Dr. Wairimu Mbogo, and also our CEO, Dr. Ivy Ratemo, but they've been able to send their regards, and they're grateful for the presentation that you've shared. So I think maybe we'll start with Dan Ngombiro. Maybe you can just give us a parting shot, just something short as we end the session.
Thank you. Thank you. I think for me is to just pass my gratitude to all of you for joining in. I think it's been quite a lot of content. I hope it's been beneficial. We really look forward to hearing more from you. We are here to provide you with all the solutions that we have talked about today. So we really encourage you to take the initiative to follow through with all of these good things that are there for the benefit of for all of us. So for that, I've shared my contacts as well, and I hope to be hearing from you. Thank you very much, all of you, and have a good night.
Right. Thank you so much, Dan. Evelyn, maybe you can go next.
Thank you, Daktari. It was lovely having these discussions with you. We look forward to everyone who wants to reach out to build and pass on generational wealth. Have a lovely evening.
All right. Thank you, Evelyn. Next, we have Dennis, and then Victor.
Yes, thank you, Daktari, and thank you everyone for joining and listening. Yeah, I think you are professionals in your area, and your role is very important in the country. So the least we can do is actually give you peace of mind through our coverage. Thank you very much.
Thank you, Dennis. Victor.
Thank you, Daktari. Special thanks to the committee for making this a success, and an even bigger special thanks to the members for tuning in and engaging us throughout the whole session. And our tagline is impact for good, and that is what we've been able to achieve here today. So we look forward to continuing the conversation, even at personal levels, even as we grow the impact. Thank you very much, and good evening.
Right, thank you, Victor. Then we'll now have Dan Ochilo to give some remarks as he talks about this offering quickly. Dan, you're welcome.
Okay, thanks a lot, Daktari. And I must admit that it was really nice, however much we were not able to see each other, but the presentations were nice, and I believe, as I said earlier, we'll be able to do many more. I'm seeing many people requesting for the slides through email. So, Daktari, I don't know how we'll be able to deal with that, because I don't know whether I can get the contacts. I don't know, because we need to share the slides, but we don't have the addresses.
I think we'll have a discussion on that and see how we can share with them as when we are sharing the recording as well.
That's that's in order. Yeah, so thanks a lot. It was a very warm and amazing session, and we look forward to more. And also remember, it is never too late to start planning for your retirement, and it's also not early to start. The earlier we start planning for our retirement, the better. That is through pension, and also planning our life generally based on all what all our presenters shared. So you can reach out to us. We have all our contacts. We are looking forward to engaging you and to be able to answer so many questions or maybe concerns that you could be having. And apart from that, we are open to offer you tier 2 solutions to your organizations. We're also open to having, we call them GIPP, Group Individual Pension Schemes, and the Umbrella Pension Schemes. So reach us in case you need any of those services from us.
Thank you so much. I think that was the last person. Oh, I see there's also Michael. Michael, do you have any parting shots?
Yeah, Daktari, thank you. I was wondering why you're forgetting.
Not forgotten you.
Thank you for the opportunity, and thank you so much for all who tuned in. It was a very informative session. So I would like to talk to you about a bit about Quickie. So we are taking all our insurance products online. So we have a platform called quickie.ke. So if you go to quickie.ke, you can get access to different insurance products from motor, healthcare, travel, personal accident, household cover, and much more. This is a very very rich platform in terms of the portfolio that is there. It has, it basically gives you access to insurance products within minutes. So if you want to get your car cover, your insurance cover for your car, you can simply log into quickie.k, and within 3 minutes, we can send your insurance sticker through your email address. What's even more, it gives you sort of a buffet in terms of insurance providers. So you get to choose the insurance providers, you get to choose the budget that you're working with. It has much, much more in terms of functionalities. You can even lodge submit your claims online. So please visit quickie.ke and find out the goodies that we have for you. Other than that, thank you so much. Thank you to all the presenters, and thank you to PSK for making this happen. Thank you so much.
Thank you, Michael. And finally, I think we'll just close with this update to our members. I think you're all aware now that we have a maximum of 7 days to subscribe and claim CPD tokens. So ensure that you do that as soon as possible. If you haven't subscribed specifically for this event, just go to the portal and type the keyword wealth strategies and you should be able to find it. Please note you'll see there are 2 entries once you search. The other option is available for subscribing. So ensure that you do that so that you beat the deadline of 7 days that has been given by the Pharmacy Symposiums Board. And a reminder, our conference is here and it's coming up this June from 24th to 26th, and it will be happening at Pride in Paradise, Mombasa. So ensure that you start planning yourself early as possible. For those who will be participating in the conference, speakers also, and also in submitting of abstracts, and ensure that you do so in advance so that at least you're able to participate. And the other conference is the 84th International Pharmaceutical Federation World Congress. That's going to be happening in Montreal, in Canada. That's from the 30th of August to 2nd of September. So ensure that you mark your calendars so that you're able to attend these events. And that marks the end of the my apologies. Can you hear me?
Yes, we can hear you now, though you had disappeared.
Oh, sorry. I'm not sure at what point I disappeared. I just realized my microphone was muted. But just thank you once again for all those who've been able to join, and also for the Livestream group team. We really appreciate for the insightful session that you've had today. And we really look forward to having more sessions just to enlighten our members. So thank you, and have a good night to you.